I would say the general trend is really one of slowdown. First, as the country gets richer, it becomes more difficult to maintain high growth. At China's current GDP per capita level, it is impossible to maintain growth at about 6%. Moreover, China faces another two headwinds. First is the worsening of demographics. Because of the one-child policies, China will face rapid aging in the coming years. Moreover, the recent tension in US-China relationships means China will find it difficult to access cutting-edge Western technology, such as semiconductor manufacturing, which further set back China's effort to become an advanced economy. I would name three. First is trade surplus. In China's case, China used to run very large trade surplus. For example, in the years before the financial crisis, trade surplus almost accounted 10% of China's GDP. The second indicator is consumption. This is because for many years, China has relied on investment to create growth, but investment without consumption is not sustainable. As a result, we want to see consumption-driven instead of investment-driven growth. The third factor is household income. As long as households are not comfortable with their income growth or financial situation, they will not spend a lot of money and instead will save the money, which means without household income growth, it is impossible to achieve strong consumption growth. I would say at this moment, there are two major challenges for the Chinese economy. First is COVID. Because China continued to implement zero-COVID policies, travel, transportation, and services sectors has been severely impacted, and especially the impact on services sector is really concerning. This is because right now, services sector generates the majority of the jobs. Because services sector such as restaurant and tourism has been severely affected by the zero-COVID, this means that a lot of people who work in those sectors, they're suffering large income jobs, and many of them probably lost their jobs. Both the income drop and the high unemployment rate are both bad for consumption. The second challenge is property. Property is the biggest and most important sector for the Chinese economy, including its upstream and downstream sectors. Together, they account for close to 20% of China's economy. Yet, property sale has declined significantly in recent months. Through the month of July, property sale has declined more than 25% year on year. And the reason of this decline can be attributed to two factors. One is households are less confident in their abilities to purchase property. This is because as the economy slows down, households suddenly realize their income is now growing much slower than they anticipated. Moreover, because in China, the majority of the property sales are in the form of pre-sale, which means households need to first make down payments, usually 1 or 2 years in advance. Recently, many large property developers have defaulted on their debt, and the financial difficulties affect developers' ability to deliver their pre-sale units on time. As a result of those two challenges, households are becoming more reluctant to purchase property. And the property problem is concerning not only because of its impact on growth, but more importantly, it also has financial implications. This is because Chinese banks not only have direct exposures in the form of mortgages or lending to developer or construction firm. More importantly, because of a slowdown in property sale, developers are now less willing to purchase land, and land is Chinese local government's biggest source of income. With land sales now also down close to 30% year on year, local governments are now having difficulties to repay their debt, which will have severe financial risk implications. A slowing, weaker Chinese economy affected the rest of the world, including the United States, through multiple important channels. Number one will be trade. As China's economy slows down, naturally this means Chinese demand for goods from other countries will also decline. Less Chinese import means less income for other countries. For example, in the case of the United States, currently the United States export close to $150 billion worth of goods to China. And the number two channel of how Chinese slowdown will spill over to the rest of the world is the exchange rate. With Chinese growth slowdown, the Chinese RMB will depreciate. A depreciation of RMB means appreciation of other currencies, for example, the US dollars. If US dollars become more expensive relative to RMB, this means that US goods are becoming less competitive, and this also means US goods may lose some of its market share due to competition from cheaper Chinese goods. The number three channels is financial linkages. Basically, concern about Chinese slowdowns and uncertainty about the potential implications may trigger so-called risk-off sellings in the financial market. For example, during the last time China's growth slowed down significantly, which was 2015 to 2016, US stock market has also declined because of concerns about China's hard landing.